So thanks a lot for the introduction, and I will not waste much time. So having spent a lot of time in the industry, academia, and various other portfolio precisely in the business of fisheries and seafood, this is one of the important topic which I came across since last year or two, and that's why then I start engaging myself to know much and more about this segment, and this will be the various key points which we will go through while going forward in this presentation. So we will go through the what are the blue bonds, then various bonds available for fisheries and aquaculture, then what is ESG investing, then which are the framework available for fisheries and aquaculture, then what are the sustainability linked bond principles, then which are the organization those who are possessing the blue bonds right now, and last one is the conclusion. Okay, so blue bonds. Now, the bond is a form of debt security, a legal contract for money owed that can be bought and sold between parties, with its price fluctuating over time. Bonds are fixed income investment where bond investors become creditors to the issuing entity. Bond investors are paid a fixed interest rate on a fixed schedule and will be returned their initial investment upon maturity of the bond. Until now, the green bond principles and the social bond principles developed by International Capital Market Association are the most internationally accepted and widely used guidelines. The green bond market is more than a decade old, but already well established. Roughly, it amounts more than $500 billion globally. Blue bonds, perhaps, are a relatively new type of sustainability bond which finance projects related to ocean conservation. The World Bank defined blue bonds as a debt instrument issued by governments, developmental banks, or others to raise the capital from impact investors to finance marine and ocean-based projects that have positive environmental, economic, and climate benefits. Like green bonds, blue bonds operate similarly to any other debt instrument by providing capital to issuers who repay the debt with interest over the time. The main difference is the blue bonds dedicate use of proceeds to marine projects such as promoting biodiversity and supporting economies reliant upon healthy and sustainable fisheries. Blue bonds are emerging as an instrument to finance the solutions at scale. Now, how it is important from the blue economy point of view. Almost 71% of the Earth's surface is ocean, and billions of people depend on the oceans for their livelihoods. UN SDG goal number 14 aims to conserve and sustainability use the ocean, seas, and marine resources for sustainable development. The blue economy is of a growing importance and gaining momentum amongst policymakers across the world. This is not surprising, as the ocean is a significant wealth generator estimated at an annual value of 1.5 trillion US dollars per year, making it the world's seventh largest economy. Fisheries alone contribute more than 270 billion US dollars to global GDP every year. Blue bonds are an innovative ocean financing instrument whereby funds raised are earmarked exclusively for the projects deemed ocean friendly and have huge potential to help surmount these challenges. So here is the world's first sovereign blue bond, which is being launched by Seychelles in the year of 2018. The Seychelles blue bond was the first bond explicitly advertised as a blue. It was launched in October 2018 by the Republic of Seychelles for an amount of $15 million with a maturity of 10 years and interest payment of 6.5%. The World Bank provided the repayment guarantee for a third of the principal, while the UN's Global Environment Facility offered a $5 million concessional loan to help cover the coupon payments. The coupon payment means the interest which is getting carried out on the principal amount. These credit enhancement instruments allowed for a reduction of the price of the bond by reducing the effective interest rate of 6.5% for Seychelles to 2.8%. The Seychelles will pay the bondholders from the central budgets. Now, proceeds from the bond included support for the expansion of marine protected areas, improved governance of priority fisheries, and the development of the Seychelles blue economy. Grants and loans arrangements done through the Blue Grants Fund and Blue Investment Fund, managed respectively by the CCAT, which means Seychelles Conservation and Climate Adaptation Trust, and the Development Bank of Seychelles, which is in short called as DBS. The Seychelles Blue Bond was launched as a private placement to directly identified end buyers and is not traded, which is one of the main difference when we compare with the other blue bonds. The preparation time for this blue bond was about 1.5 years. The Seychelles blue bond issue has no form of external assessment. However, the proceeds will be disbursed subject to World Bank policies and procedures. Now, why Seychelles decided to go for a blue bond? Do you have any thoughts? Well, the Seychelles economy was highly dependent on the ocean and on fisheries for food, nutrition, and livelihoods, marine habitats, and other blue economy sectors such as tourism. After tourism, the fisheries sector is the country's most important industry, contributing significantly to annual GDP and employing 17% of the population. Fish products make up around 95% of the total value of the domestic exports. As the economy grew and fisheries became more exploited, the Seychelles recognized the need to rebuild and sustainability utilize fish stocks through improved governance and management of the sector. All people involved in the fisheries segment will be benefited majorly through this bond. Now, at the right hand side, you may be viewing a couple of pictures with the name Swiofish 3. Now, what is this Swiofish 3? So, Swiofish 3 is a 6-year fisheries project of the government of Seychelles, which is being supported by the combination of World Bank, GEF, and this first sovereign blue bond. Now, Swiofish 3 has 4 major components as shown in the slide and is classified as a Category B project by the World Bank, indicating that moderate and minor negative environmental and social impacts and the risks are anticipated. Now, this is another blue bond which has came into existence in the year 2019. It is called Nordic Baltic Blue Bond. Now, NIB, that means Nordic Investment Bank, NIB's inaugural Nordic Baltic Blue Bond is targeted at sustainable investors. NIB has been active in the green bond market since 2011 and is the largest issuer of green bonds in the Nordic region. The Nordic Baltic Blue Bond is specifically aimed at investors that are conscious of the challenges facing the region's water resources, especially those affecting the Baltic Sea. NIB intends to continue and intensify its efforts toward cleaner and smarter water infrastructure and management in the Nordic Baltic region. Now, this might be of interest to many of the people, those who live in the Asia. The existence of Asian Development Bank Blue Bond Framework. Now, Asian Development Bank, I will call in short as a ADB. Now, all ADB blue bonds are consistent with the green bond principles. The green bond principles are voluntary guidelines coordinated by International Capital Market Association, which is in short called as ICMA, ICMA. The ADB blue bonds are consistent with the voluntary sustainable blue economy finance principles hosted by United Nations Environment Program Finance Initiative, of which ADB is also a signatory. Blue bonds includes investments that contribute to first, marine and coastal ecosystem management and restoration, which covers sustainable fisheries management and sustainable aquaculture. Second, pollution control for marine and coastal environments. And third, sustainable coastal and marine development, such as sustainable ports, shipping, and marine renewable energy. Among the sustainable fisheries management, various factors got included, visualized as improved cold storage processing, certification schemes, then the ecosystem-based fisheries management, and so on. Whereas when you go to sustainable aquaculture, it includes all the functions, those are coming under the aquaculture, including mariculture and alga culture. It also includes the development of alternative feeds for aquaculture. Now, these are the various steps which involved in the blue bond financing, the framework of ADB. The ADB's blue bond working group meets on a quarterly basis. The sector experts select and confirm eligibility of the projects. The list of eligible projects is summarized in the annual impact report, which is signed off by the senior management. Now, senior management is nothing but the person at a DG level. For example, Director General of Sustainable Development and Climate Change Department. Blue bond net proceeds will be allocated within ADB's treasury to special sub-portfolios. Development effectiveness and compliance with environmental, social, and governance aspects is monitored on an ongoing basis by ADB during project implementation as per ADB's operational policies and strategies. Through supervision and monitoring at project level, it is ensured that safeguard and other requirements are compliant during project preparation and implementation. ADB's Blue Bond Framework has been reviewed by the Cicero Shades of Green, a leading provider of second opinions on green bond frameworks, to confirm the alignment with the green bond principles. So in a nutshell, if I have to summarize the various steps involved in the blue bond financing, first it will get checked eligibility criteria for blue bond financing, then allocation of proceeds, ensuring compliance, monitoring and reporting, and final, the external review being done by the second party opinions like Cicero. Now, this is another blue bond which again come in the year of 2019. Now, Morgan Stanley served as the sole underwriter of a blue bond in 2019 for a World Bank. The $10 million in proceeds focused attention on plastic waste reduction efforts in oceans and the promotion of the sustainable use of marine resources in developing countries, including scientific research, policy and regulatory reform, and cross-sector collaboration. The bond helps to highlight the growing need to protect the world's ocean and the economies that rely upon their health and resilience. The issuance was a part of a larger thematic bond initiative from the World Bank to support the SDGs, that is, Sustainable Development Goals. The market in general for global sustainable bond is growing rapidly. As per one of the report in 2019, sustainable investing assets total more than $30 trillion globally. In the United States alone, $1 in $4 is sustainably invested. Even if you see in the figure for the 2018, more than $211.6 billion US dollars got invested, and high contribution comes from the green bond, followed by the sustainability bond, and then the social bonds. Now, what shall be the framework for the blue bond? So this is one of the good report which is available, Blue Bonds Financing Resilience of Coastal Ecosystem, which is released in March 2019. Please go through it in detail. It might be very hard to predict at this stage the direction the blue bond movement will take. However, two conceptual approaches seem to make most sense. Blue bonds that finance broader sustainable blue economy strategies of issuers. This could happen under the form of a green, social, or sustainability bond, always complemented by and weighted against the sustainable blue economy financing principle, or the blue bonds that finance specific narrowly defined impact transactions borrowing, in particular from the climate bond initiative taxonomy and screening criteria. Examples will be transaction focusing on blue carbon habitats or blue natural capital compatible coastal infrastructure investments. This is a little bit difficult to understand, but going through that report, maybe you able to grab on many of the things. Now, this is just the summary of various gaps and barriers observed while developing the blue bond market with probable solutions. You may please go through the details of the report mentioned to understand the factors in detail. But just to name a few, here you may see that the projects are too risky or too small or too complex or lower issuer credit rating. The one of the main gap which is being found is the lack of buyers, which these days I think it is getting in some progress way. Then some of the times lack of credibility, and that's why then the point of the second party opinions are coming into the picture. So the slowly this market is growing in some good capacity, I can say. Now, when it comes to develop the blue bond, 3 steps have to take into consideration. First, considerations before preparation. Second, development of the blue bond processes and its implementations, which ultimately covers qualifying asset prospects, transparent tracking method, and reporting. And last but not the least, issuance and post issuance. So there are various points which you need to check while going under these three main steps, and those are summarized over here in short. Now, this is another initiative which was came into existence. So it is called Climate Bonds Initiative. So Climate Bonds Initiative has sought to develop screening criteria for green bond investments in aquaculture and capture fishing in the marine environment. With the help of Marine Technical Working Group, which in short called as TWG, the work explored key climate and environmental issues with uh, uh, environmental issues in the sector. The TWG result with identifying usable, ambitious, and scientifically grounded criteria to screen for appropriate climate mitigation and climate adaptation and resilience performance in the sector. As one of the results, like when they gone into the details, they understood that much of the work need to be done, and hence in between they halted the project because the GHG impact of capture fishing is still relatively poorly understood because of lack of data and so on. Having said that, when they were going through this kind of work, they come across few of the categories, and they have mentioned along with the examples eligible assets and projects, so that whoever will go for this kind of study in the future, they may got some kind of understanding. And they listed the main three categories: offshore operation, onshore operations, and supporting infrastructure, against which then they put some example so that a person or a professional could easily understand and go through that way. Now, to establish appropriate GHG criteria for fishing vessel, it is necessary to understand what will represent the low GHG emission fishing. This seemingly has not been a priority issue in the fishing industry in the past. Hence, research and data are thus limited. After considerable research and gathering input from the TWG, several options were developed for setting mitigation requirements for fishing vessels. Now, I have also listed over here potential data sources for setting emission thresholds. Now, the first one, FEUD, Fisheries and Energy Use Database. It was compiled in 2014 in a study by Robert Parker and Mr. Peter. It encompasses all available published and unpublished fuel use data for fisheries targeting all species, employing all gears, and fishing in all regions of the world available at that time. FEUD currently includes roughly 1,800 fisheries records, ranging from individual vessel audits to fishery-wide assessments to national or global fleet statistics. Then there are some other analyses of interest. Now, among those other analyses, they use the data from a very famous portal like Global Fishing Watch, in short GFW, IHS, and AIS satellite data to calculate the GHG emissions from commercial fishing vessels. A more recent analysis by Greer has been done in 2019, who used the Sea Around Us global catch and effort databases to calculate total CO2 emissions of the industrial fishing sector. Now, when it comes to the potential data sources for setting emission threshold per protein units, there are two important parameters. First one is the GLEAN. Now, it has been developed by the FAO. Now, what is the meaning of GLEAN? It is the geographic, it is nothing but the geographic information system framework that stimulates the biophysical processes and activities along livestock supply chains under lifestyle assessment approach. And in among other analyses, notable was the one compiled by Ray Hilburn. It contains 148 assessments of animal source food production for livestock, aquaculture, and capture fisheries that measured 4 matrices of environmental impact and standardized these by CO2 equivalent per units of protein production. Now, there are a couple of other frameworks available, or the systems available, where in case if you can reach out to them, then they may able to help you to understand what this kind of bond concept means. So MSC, ASC, then this Seafood Stewardship Index, Fish Tracker, CRAW, FIP, and SOFI. These are one of the tools, or you can say the systems, which can help you out to understand the entire bond structure, how it is going further in the fisheries and aquaculture space. Now, when it comes to the companies, like which kind of companies could get the benefit from these kind of blue bonds. When a company issues a blue bond, it specifically commits to investing the proceeds on business solution for oceanic health, fresh water, and or to improve access to water and sanitation. Until there is a widely accepted set of blue bond principle, issuers are encouraged to use ICMA's social and green bond principles adopted to a blue use of proceeds. Moreover, UNGC, or United Nations Global Compact Sustainable Ocean Principles, can serve as a guide for responsible business practices. We will view that in detail in coming slides. Once a company has defined the selection criteria for the projects financed by the blue bonds, they can acquire an independent second party opinion to reassure investors that the blue bond will meet their requirements. So precisely, there are companies who are from the segment or situated at the ports, in the shipping section, infrastructure, tourism, fisheries and aquaculture, the important one, offshore renewable energy. All those companies involved in these sectors will benefit. Besides the sector, those who are land-based, for example, manufacturing, consumer packaged goods and textiles, agriculture, water and sanitation. So all the companies associated with these kind of segments or structures, they will definitely get the support or get the advantage from these kind of blue bonds. Now, here comes the ESG, or what is ESG, or what is ESG investing? Well, look at it. Now, here is the ESG, environmental, social, governance. Now, ESG is used as a framework to assess how a company manages risk and opportunities that shifting market and non-market conditions create. Now, environmental criteria addresses a company's operations, environmental impact, and environmental stewardship. The social criteria refers to how a company manages relationship with and creates value for the stakeholders. The governance criteria refers to a company's leadership and management philosophy, practices, policies, internal controls, and the shareholder rights. Now, whenever you have to run a company, there are always the internal stakeholders and external stakeholders. When it comes to internal stakeholders or the shareholders, it will be inclusive of the owners and employees of that firm, whereas when it comes to the external shareholders, it will inclusive of consumers, suppliers, investors, creditors, media, communities, different kind of trade unions, and government agencies as well. Now, integrating ESG factors into valuation allows for greater insight into intangible factors, which include culture, talent recruitment and retention, operational and risk that can improve the investment outcomes. So from investment point of view, this ESG is very much important. Now, here are some of the examples of the strong ESG and the weak ESG. So ESG has been explained against the parameters by quoting examples from strong ESG and weak ESG side. So I will not go much into these details, but in case if you are interested to, then go to the Corporate Finance Institute website and you will get much of information which might be of use in case if you are thinking about the ESG involvement in your companies also. Then here are the different disclosure frameworks, initiatives, and assessment firms which are related to the ESG. So let's go one by one, or the important ones. So among the most credible disclosure framework, first one is the SASB, that is Sustainable Accounting Standards Code. Now, SASB standards guide the disclosure of financially material sustainability information by companies to their investors. Then the TCFD, so Task Force for Climate Related Financial Disclosures. The Financial Stability Board created the TCFD to develop the recommendations on the type of information that companies should disclose to support investors, lenders, and insurance underwriters in appropriately assessing and pricing a specific set of risk related to climate change. Last one is the Global Reporting Initiatives, in short, GRI. GRI offers the most comprehensive set of sustainability reporting standards. Then there are different kind of initiatives related to ESG, which includes investor initiative and corporate initiatives. Both investors and corporations are creating coalition and cross-sector partnerships to continue advancing ESG's implementation and standardization. Here you are viewing the PRI, Climate Action 100 Plus, and We Mean Business Coalition are one of the lead and most impactful investor-led initiatives. Climate Action 100 Plus ensures the world's largest corporate greenhouse gas emitters take necessary action on climate change. Among corporate initiatives, RE100, then United Nations Global Impact and Sustainable Purchasing Leadership Council are the known ones. Whereas if we move to the last part, which is rating agencies, the MSCI, Just Capital, Sustainalytics, then CDP, CSR Hub, Cicero are the global ESG rating firms who do the assessment work or the second party opinions for all these kind of initiatives through the different frameworks. Now, how or which is the main ESG framework that is developed for the fisheries and aquaculture? Let's look at it. Now, this has been developed by the UN, the United Nations Global Compact Sustainable Ocean Principles Guidance. So, the Sustainable Ocean Principles aim at promoting the well-being of the ocean for the current and future generations, and to emphasize the shared responsibility of businesses to take necessary actions to secure a healthy and productive ocean. Now, companies signing on the Sustainable Ocean Principles commit to assess their impact on the ocean and integrate them into the overall strategy. The principles provide a framework for responsible business practices in the ocean. Now, here is the main thing. They have developed the guidance both for fisheries and for aquaculture. Now, the scope of this document is marine capture fisheries defined as the sum of all activities to harvest and process a given fish resource from the ocean. The guidance is addressed to all stakeholders operating throughout marine fishery value chains. In particular, the guidance takes into consideration the Food and Agriculture Organization's CCRA, that is Code of Conduct for Responsible Fisheries, as a globally recognized text contributing to the sustainability of the fisheries. There are total 9 principles of the guidance, out of which principle 1 to 4 fall under ocean health and productivity theme. Best practices and examples do exist for all principles, though it is a recently developed document. Now, I will not read all the principles. However, what important, which I would like to highlight over here is, though these are the newly developed principles, the good thing is there are many of the initiatives or the practices or the companies, those who are already following all these kind of principles. Now, if we have to see the Glow Litter initiative, so this initiative has been developed by IMO, FAO, and UN Global Impact, and they are aiming at tackling plastic litter from ships and fisheries. Now, you might be viewing at the right hand side Hopper project under Principle 4. Now, what is a hopper? So hopper is nothing but a mobile stainless steel tray that is placed on the deck of the tuna vessel. It tries to demonstrate that the use of hopper reduces the mortality of non-target accessory species, as they can be detected and released more quickly. The result of this project will be presented globally in all regional fisheries organizations. Now, principle 5 to 7 come under governance and engagement theme. Now, here also all the principles have been listed in very neat manner. We can look at some of the best examples or the best practices, among which under principle 6 there is sustainable tuna of Ecuador brand. What it is, the sustainable tuna of Ecuador brand for products elaborated in those industries that comply with the established standards aligned with FAO guidelines along the value chain. And another one is UN standard 195006. So this is also a standard which is developed for the tuna from responsible fishing. Now, among the last two principles, those are coming under the data and the transparency. Now, principle 8 and 9 represent this data and transparency theme. Among these, now just before some time, I also talk about the Global Fishing Watch. So Global Fishing Watch collect a lot much of data of various vessels throughout different geographies and try to help by submitting those data to the respective governments through a kind of mini analysis. Now, one of the notable one here, which I would like to indicate to you, is Marks and Spencer Interactive Digital Map. Now, what they did, this particular interactive digital map allows the customers and the shareholders to track the origin of its seafoods, so that in short they may able to understand the traceability of it. So this is one of the very good tool develop, and that's why it came under principle 9, which says be transparent about their ocean related activities, impacts and dependencies in line with the relevant reporting frameworks. Now, there are for this fisheries guidance, now here lot many things have already been mentioned. However, these are different entities or different organizations, those who are already working on certain kind of those principles. As this initiative has just been started, it might be of use for many of the organization to reach out to them. Now many among the lot are the known one. For example, GSSI, Global Sustainable Seafood Initiative, then GDST, Global Dialogue on Seafood Traceability, ISSF, JFW, and hope they will make a positive impact by doing collaboration with various organizations globally to achieve the SDGs. So these were the principles, total 9 principles, which came under the fisheries guidance from the ESG point of view, which has been developed by the UNGC Sustainable Ocean Principles. Now, the same has also been developed for aquaculture. Now, if I have to talk about the aquaculture, since 2014, aquaculture has provided more fish for human consumption than the capture fisheries. And by 2030, aquaculture is expected to provide about 59% of the fish available for human consumption. According to the State of the World Fisheries and Aquaculture 2020 published by FAO, total world fish production is expected to expand from 179 million tons in 2018 to 204 million tons in 2030. Now, the farm seafood value chain is complex and involves many levels. Thus, it is important to ensure transparency of operations and the supply chains, emphasized in this particular document. Now, here, the principles have listed are more or less same, which was there in the fisheries document. What we can understand from here is a couple of best practices or best examples. Now, it is a good thing that for principle 1 also there are a couple of good examples, out of which we will see the SSPO, that is Scottish Salmon Producers Organization. What does that they did differently? Now, this SSPO, they have started voluntary reporting schedules for sea lice, survival figures, and wild catch data for RASE, which is used in the sea lice prevention. And that's why they come under this principle 1. Then when we go for the Leroy Seafood under principle 2, they did something good. They explored how the kelp, one of the seaweed, can be used as a future source of energy. Here, SalMar is also listed. SalMar is one of the Norwegian salmon farmer company. Now, they through its iFarm concept and the development of new pen technology, SalMar develops solutions that improves the overall sustainability of a salmon farm and reduces its impact on the ocean health and the biodiversity. Their program has already in place, and it's giving very good results. When we go for the principle 3, DS Smith. Now, DS Smith is using the green coat to keep seafood fresh from catch to customer. Then the Pincoy project, it is aiming to reduce the aquaculture antibiotic use in the Chilean farms. Now, important which I would like to highlight over here is Nohetta furniture. Now, how it has been listed related to the fisheries? It is because the furniture is made from the discarded net from the Norwegian farms, and that's how it come under the principle 3. When we go for the principle 4, Scrating has did some good work. It has already committed the few of the US $1 million in 2020 to develop the alternative ingredients for the aquaculture feed. Now, principle 5 to 7 again come under the governance and the engagement. Now, if we look at the principle 5, the UK DEFRA Seafood 2040 has been listed as one of the best examples. Now, it is nothing but the strategic framework to build a sustainable seafood industry. I have witnessed myself as when I was working with Friend of the Sea last year, our director was also invited to give his brief regarding the sustainable certifications for seafood for another 20 years, how it can take place in UK. So that was one of the good things which I also have observed. When it comes to principle 6, Twegmans, now it's one of the retailer chain, and they have the retailer seafood sustainability requirements, which doing a good work and showing the best practices. Tesco is a very known name. Now their seafood policy is focused on sustainable sourcing and involvement in industry-wide initiatives. Now, when we go for the principle 7, Nutreco, what the different thing that they have did, it created a supplier code of conduct that enables them to engage with the suppliers on sustainability issues. When it comes to Leroy Seafood, they also establish an ethical code of conduct. And last but not the least, the Scrating. Scrating has developed the sustainable catfish program in Nigeria. This project is really doing very good. In fact, in last year also, they have got involved many number of farmers which are benefited in terms of revenue purpose as well. Now, principle 8 to 9 again represent the data and transparency theme. Now here, again, the example is Nutreco. Now, Sea Lice Research Center collaboration on sharing data to mitigate the challenges of sea lice in aquaculture facilities. Another example is Parents Watch. Now, all ice levels and treatments are available for all aquaculture facilities in Norway through this external platform. When it comes to the principle 9, be transparent about the ocean related activities, impacts and dependencies in line with relevant reporting frameworks. One of the good known example is Ocean Disclosure Project. Now, various companies' disclosures of supply fisheries and aquaculture sources, including feed components, those all are come under the Ocean Disclosure Project. Now, Sarmac here again shown the lead example. What we saw in the past is related to the iFarm. Now here it is listed under principle 9 as well, and they did super thing by involving in a blockchain seafood traceability initiative directly with the customer laboring. So the customers will get benefit as the seafood traceability has been done through the blockchain. So what it shows, there are many of the companies, those who come forward, started following these kind of guidance and showing that it is possible. So it might be much more encouraging and motivating to many of the people. Now here again, the different kind of partnerships to be considered, or the reporting regions, it is nothing but the ACMSC, BAP, Global Gap, and few of the other things are already listed over here. We have spoke about it, so I will not spend much of the time over here, but this is just for your information. So when it comes to principle 5 to 7, ISO 9001 is also one of the main standards which they are suggesting besides SEDEX and Global Reporting Initiative. And same is for 8 and 9, more or less many of the certification programs, report regimes are same, which includes also the partnerships, which includes Global Salmon Initiative, then the ASC, MSC, SSI, GRI, PAP, Global Gap, and so on. Even the Scottish Salmon Producer Organization, which we seen in the first place itself. Now, this is what comes for the sustainability linked bond principle, which is taking place and actually being adopted by few of the fisheries organization. Let's try to understand what is SLBP. So sustainability linked bonds aim to further develop the key role that debt markets can play in funding and encouraging companies that contribute to the sustainability from an ESG perspective. The ESG, which we have learned just some time back. The sustainability linked bond principles provide guidelines that recommend structuring features, disclosures, and reporting. They are intended for use of market participants and are designed to drive the provision of information needed to increase capital allocation to such financial products. The SLBP are applicable to all type of issuers and any type of financial capital market instruments. The issuance aligned to SLBP should provide an investment opportunity with transparent sustainability credentials, sustainability linked bonds, and so on. So one of the externally verified sustainability objectives are KPIs and the SPT. So this SLBP have 5 core components. One is KPI, SPT, bond characteristics, reporting, and verification. KPI is nothing but the key performance indicators, and SPT is something new, which is sustainability performance targets. So this is the SLB disclosure data checklist, of course, of pre-issuance, which include the general points, the selection of KPIs, the calibration of SPTs, then bond characteristics, reporting commitments, and second party opinions. So there is much of the information which has been gathered, again, all these 5 to 6 major points, along with the recommendation, whether it is necessary or it is just the recommendation. So this is the pre-checklist, which is important for the SLB disclosure data. And in the same way, this one is the SDB disclosure data checklist post issuance of bond, which include various points covered under general category, then reporting, and the verification. Now, Thai Union Blue Finance Bond. So this is one of the company which is based in Asia, precisely in Thailand, and they did some very good work. So here, if you see, the Thai Union is the world's largest producer of shelf-stable tuna products with annual sales crossing more than $4.1 billion and a global workforce of over 44,000 people who are dedicated to pioneering sustainable, innovative seafood products. Now, Sea Change is nothing but their sustainability strategy. Sea Change is a Thai Union sustainable strategy with measurable commitments to delivering real lasting changes in the way Thai Union operates. Sea Change is an integrated plan of initiative organizing to 4 programs to drive meaningful improvement across the entire global seafood industry. And how it linked to the sustainability finance framework. So the Thai Union's group sustainability linked financing framework includes the 3 KPI, of which here the Sustainalytics, which is the second party opinion firm, have opined only on the KPI 2 and KPI 3. So what was the KPI 2? KPI 2 was carbon intensity of finished goods, and KPI 3 was percentage of tuna vessels with electronic monitoring and or human observers. Now, Sustainalytics considers KPI 2 to be strong, given that it is a direct measure of performance on a material environmental issue. It is based on clear and consistent methodology, and it can be assessed against the external benchmarks. Now, KPI 3, which is an indirect performance metric, it's considered to be adequate based on its scope of applicability to the group's operations, its materiality relevance, and its clear calculation methodology. So the first table itself gives an overview about the KPIs and the SPTs. Here, if you look at these tables, then what you have to understand is you look at the figure under 2016 and what the target they have decided for 2026. This is for KPI 2, whereas at the bottom KPI 3, so percentage of tuna vessels with electronic monitoring and or human observers. You see, for 2020 baseline, it was 75% completed, whereas by end of 2023, they are aiming to take it to 90% and planning to do completely, that is 100% by end of 2026. So Thai Union Public Company issued sustainability linked bonds, which will tie the coupon rate to achievement of these following SPTs, uh, which have already been listed. So sustainability have did the work for SPT2 and SPT3, whereas SPT1. So this is another Dow Jones Sustainability Index. It is one of the index in which this Thai Union is coming under top 10 rankings for last many years, and they also have an aim to rank in those top 10 companies for the DJSI Food Products Industry Index in 2023 and 2026 as well, but that has been covered by some other company. Now the Thai Union is from the capture fisheries background, whereas the SalMar green bond framework, it is from the aquaculture end. So, SalMar is Norway's second largest salmon aquaculture company by market value, headquartered on Frøya in central Norway. Sustainability is one of the SalMar's most central postulates and considered across its operation. Based on assessment of framework alignment with green bond principles, the project categories and SalMar's governance green bond framework receives the overall CISRO medium green shading and governance scores as of excellent. In simple terms, Cicero was the second party opinion assessment company who has given the rating of medium green in general, and has given the governance score as an excellent. Now, what is medium green? What is dark green? What is light green? So those are the different shades which they cover as per different defined criteria, which you may able to view in under shades of green. Now, when it comes to the environmental strategies, there are many things which the company has taken into consideration, right? From GHG emissions, feed, transport, electrification, certifications, escapes, sea lice, and so on. So it is difficult to go in detail for each and every factor, but one of the important ones I will let you know. For example, marine ingredients in feed. Now, marine ingredients in feed used by SalMar are either MSC certified or comply with the Marine Trust or equivalent schemes. SalMar is working on several new transport projects involving combination of sea, rail, and road transport. It became the first aquaculture company to trial transport to the European market by sea. SalMar is working on connecting more farms to the electricity grid and electrification of vessels. In 2016, the company put world's first fully electric aquaculture workboat into operation, and in 2020, it leased the world's first hybrid battery wellboat. In order for the company to reach its emission reduction target for 2030, SalMar's ambition is to shift towards a fleet of 100% electric and hybrid vessels in the next decade. SalMar has a target that all its farms shall be certified by Aquaculture Stewardship Council or DBU. SalMar has eliminated the use of copper as anti-fouling for its net pens, as it is a toxin affecting the local marine environment. And other than this, then Collier Fairer Protein Producer Index 2019 ranks SalMar 7th in terms of risk and 9 in terms of risk plus opportunity out of the 60 largest global meat, dairy, and aquaculture producers. So Collier Fairer Protein Producer Index is one of the initiative by the Jeremy Kohler Foundation. Please go through that report. It's very much beautiful. And not last but the least, what are the conclusions? So we gone through different kind of blue sustainability linked bonds. It is relatively a new concept. Then we have understood the investing into the ESG framework, then which are companies involved, then how the UNGC Sustainable Ocean Principle guidance may help few fisheries and aquacultures to set the tone for the ESG-led businesses and so on. Then we have understood a few of the big players, those who are involved in this business. And definitely, my opinion is that the new finance arrangement will definitely help out to many of the stakeholders, those who are involved in this particular field. The market is yet open. There are only few who have adopted it, the segment is growing. The framework is also getting amended day by day. And I hope to see this as one of the good finance instrument which will help and support many of the businesses to grow in some good manner. Thanks a lot.